Yo, what's going on, my prophets? Your boy Cali here. Back at it again. Been away for a little bit, working on the group, trying to expand that. Our Masternote channel is coming hopefully this week. Just putting some stuff together, working with some members in the group. If you haven't heard about our group, it's the Profit Chasers. Check us out, profitchasers.com. Uh, we're just a mastermind group. It's not a signal group. It's not a pump and dump group. We're just a couple of like-minded individuals here trying to make some money off cryptocurrency and other investments, mostly related to cryptocurrencies. So I'm here to talk about something that I keep getting hit up about, and trading, how to make profits in trading, how to even sustain some kind of income trading. I'm gonna just let you in on one secret, one successful thing traders do. One thing, it's one thing that can mean the difference between actually being able to cut it as a trader and not. And especially as a day trader, swing trader, you kind of might get away with it for a little while, but it's going to catch up to you. But a day trader and a swing trader all day, this is going to be you. Um, so let's start with the basics. When you're trading, there should only be three possible outcomes. Some people say four. For me, it's only three. It's like when you're playing Street Fighter, once in a while you get a draw, but for the most part, there's only three outcomes. There's going to be a big win, a flawless victory. Everything went perfect, everything to a T and beyond your expectations. The trade that you were in kept running. You put a trailing stop and it just wouldn't stop, and you're up big. This is the most average. It's a small win. That's most of our trades are going to be small wins. Especially with the proper setup. This is hopefully what you should be doing. Especially if you're a day trader, you're trading constantly. The small wins is going to be the portion of your portfolio, and that's how you're going to push it forward. And the last one, which people hate, is the losses. Small losses. And I emphasize, these are the three outcomes that I think any successful trader has. So even successful traders are losing out there, guys. If they're telling you they're not, it's bullshit, because eventually your system goes against you. You might be 99% accurate, but I know that you're going to have a loss here and there. Um, the secret is to eliminate big losses. And that's how you're actually going to start making money. Uh, if you set everything up and you could just eliminate just this one thing, it's almost a guarantee that you're going to be making money. Obviously, this is not financial advice, guys. This is just me based on, reading technical books, going to seminars, and just years of experience. I noticed that when I got my shit in check, I was able to progress as far as a trader. So, what are the causes, the major cost of big losses, right? And I'm talking about just blowouts. And one thing, improper risk to reward ratio. So, if you're trading 1-to-1 and you're expecting these big gains, but you're willing to lose big too, most likely it's not going to go in your favor. You know, and that's just plain and simple. Risk to reward ratio is a big factor as far as money management and trading. There's plenty of books out there you can read. Uh, the other thing is not following your setup. If you're setting up, you're looking at your TA, you spend some time looking at your TA, and you do the trade with a clear entry and exit, and you don't follow it, it's probably worthless to try to, just gamble. Just might as well go to the crowd table and try to roll. And this is the biggest one that I see, and this is how people really lose their ass, and it's revenge trading. If you're in the middle of a trade, it goes against you. One of two things happen. One is you try to double down to try to gain back your win, or gain back your loss, right? You're like, hey, if I'm trading $100, I'm gonna trade $1,000 and I'm gonna make it big because I know I'm right. The market's always right, guys, and if you try to tell the market which way to go, you're gonna end up losing. So that's definitely one of the big things I see is people revenge trading. The other one is when they try to revenge trade it the other way. If you're at, Bitcoin's at $8,700 and then you jump in and it goes the other way and you put a long, and right away you want to flip your positions without even trying to look at any kind of setup. It's a revenge trade, because now you're trying to go against your own trade, because, oh, you were wrong, so the market must be right, and then you start swinging back and forth. Next thing you know, you've lost a good portion of your capital. So these are the three major tips I'm gonna give you guys. Risk to reward ratio. If a risk to reward ratio for me is, I like to have a minimum at 3-to-1. The reason is that if I'm right 1 out of 3 times, I'm breaking even. Okay, 3-to-1, guys. That's my secret magic ratio. At 3-to-1, I'm making money. At 2-to-3, I'm making money. At 3-to-3, like, if I hit all 3 wins, all 3 trades in a row, I'm pretty fucking excited, right? But the reason is 1-to-3 is, you're making these small gains, these small wins, and the small losses. Even your wins are gonna usually outperform your losses if you have a proper setup. Um, I'm gonna move on real quick and say, hey, if you spend so much time messing with these indicators, trying to learn moving averages, RSIs, stochastic RSIs, oscillators, momentum indicators, all this crap, and you're reading books and you're watching YouTube videos, why don't you follow the game plan? In any athletic competition, there's playbooks. If you're not following the plays, your team's probably not winning. And that's just plain and simple, guys. You can train all you want, but if you don't stick to the game plan on game day, it's not going to go good. Um, something that you just have to come to grips in trading is, you're not always going to be right. And then especially when it comes to these big losses, when you're revenge trading, what happens is, we get these crazy, like, streaks. It's like, if you're in Vegas and you're at the crab table, and it's like you can't roll the wrong way to save your life, and that's just you're just rolling and hitting, and that sometimes you go into these things in trading, and that's what's gonna happen, and you think you're a god, and you start making stupid bets, and that's when you start losing money. You want to avoid that by sticking to your game plan in every single trade, guys, you go into. You want to have a clear entry and exit point. Obviously, you can always adjust your exit point on the upside, but never on the downside. In other words, you don't want to change your stop loss. If you're saying, this is how much I'm willing to lose, that's how much you're willing to lose. You can always move it up. If you think the trade's running up and you don't want to take a certain percentage, or however you're trading, you can move it up. But don't be scared to take profits, even small profits, 5 to 10%. Imagine 1% on a daily. That's 365% a year that you're going to make on your capital. So that's why I'm saying it's so important to have clear exit and entry points in anything. And this is going to be my biggest tip to you guys. If you're trading and it's not going the way you want it to, in other words, you're getting traded out, your stop losses seem to be too short. It seems like every time you buy one way, it goes the other way. Every time you sell, it goes up. It's time to take a step back. You're not in sync with the market. I personally love paper trading. There's test nets, test accounts out there you can use, like BitMEX. But you should honestly just take a step back and try to evaluate what's going on, why you're getting stepped out. Are you not seeing the big trend of the market? If you're zoomed in on the day, if you're day trading, try to zoom out to the day chart and see why is it that you keep getting stopped out. Maybe you're going against the trend, and your indicators need to be tweaked a little for your time frame. So with that being said, guys, that's pretty much it. Like I said, if you can eliminate these big losses, in no time you'll be making money. That's the way I've seen it go down in my eyes. The other thing too is capital allocation. When you're trading, and say you're trading with $1,000, you want to be able to play enough hands to win. So for me, it's at least 5 times. So I don't like going more than 20% of my capital at any given trade. So if you have $1,000, that would be $200 per trade. Because what's going to happen is if you go on a bad streak, you're going to get traded out real quick. So you want to allow yourself enough room there to breathe. So 5 times is good. You might want to go more, especially if you're just starting. You might want to do 10% of your, 5 to 10% per trade. And I know it seems like it's not going to go nowhere, but trust me, if you start hitting it right, it's gonna start adding up really quick. As always, this is not financial advice, guys. All right, this is just how it's gone down in my life and through the years of experience and seminars and stuff that I've seen. So once again, man, if you like what you're hearing, you want to hear more, like the video, share the video. Check out theprofitchasers.com. We have one of the most solid groups. Keeps growing daily. We add members on the daily, just contributing. Strong entrepreneurship is in there, and people want you to succeed. None of this, trolling and shit like that, man. So go ahead and check out our group. Check out the website. Hit us up on Instagram, Twitter, Facebook. However, try to reach out, man, and we'll try to hook you up, get you in the group. Uh, Use the code buy the dip right now. You get 25% off. I'll leave a link down below to the group, and hope you guys have a good one, man. I'll be trying to get more on these videos, trying to get back in the groove, and as always, man, happy stacking.